Good morning, everybody. It is Tuesday, June 21st, 5:50 a.m. Central Time as I record here. December corn futures down 16 at 7:15. November soybeans down 19 and 3/4 at 15.17 and 3/4. September Chicago wheat down 7 and 3/4 at 10.39. September Kansas City wheat down 8 and a quarter at 11.03 and 3/4. September spring wheat down 9 and a quarter at 11.60 and 3/4. If you guys are listening on the podcast, appreciate it. If you're on that Apple app, leave me a review. I could certainly use some more. If you're watching on YouTube, guys, subscribe, leave me a comment. Let me know what is going on in your neighborhood in regard to the crop. If you need some additional information from me, go to my website, www.standardgrain.com. Check out my premium subscription service today. My premium subscribers get a ton of information direct from me every single business day. Morning email's been going out about 5:30 a.m. Central, give or take. That email includes every overnight headline you need to be aware of, lots of charts, graphics, weather info, all of my grain marketing recommendations. My daily subscriber-only videos are part of this. I did one on Friday regarding December corn seasonals, and I specifically narrowed it down into these high-priced years in which December corn traded $7 or better during the preceding summer. There have only been 4 such years, including this year, so I tried to narrow down and do a little bit more specific study of the seasonals. And then yesterday, of course, I did a weather video. I do this every Sunday, or in this case, Monday. During weather markets in the summer. If you guys are interested in this stuff, sign up today. It's $50 a month. There's no other fee. There's no other obligation. You can cancel at any time. Nobody will try to sell you anything else, I promise. The U.S. Corn Belt will be mostly dry this week. Now, I think we're in a weather market, and I think I know what the market's trading, and I missed this last night. I didn't think we'd open sharply lower last night personally, but we did. So the next 7 days in terms of precipitation is still pretty dry. The models are being very stingy in regard to precipitation. Only just scattered rains across maybe parts of Iowa, northern Illinois, parts of Wisconsin, Minnesota. But you look at most of Illinois, most of Indiana, most of Ohio, Kentucky, Missouri, the plains from North Dakota all the way down to Texas for the most part, pretty much dry. In terms of temperatures, this is where things get kind of interesting, I guess. You're still going to be hot. The map on my screen is expected high temperature for today, and still a lot of 90s across the Corn Belt. We knew that was coming. Now, the way that the temperatures look here moving forward, you're going to see this mass of cooler air enter into the northern plains, like North Dakota and Montana, those sort of places, beginning on Friday. And those cooler temperatures will move into the Corn Belt by, say, Saturday, Sunday, Monday next week. So by Monday next week, a lot of areas are going to be 10 to 15 degrees below normal in terms of temperatures. So this heat wave is going away the way that it looks right now. The heat wave is going to go away. Maybe it comes back in the 8 to 14. Now, in terms of precipitation, we're still not talking a whole lot here from now through the end of the month. Still very much below normal here over the next week. 6 to 10 day is still dry. And then your 8 to 14, maybe more normal precipitation for the Western Corn Belt, for the plains. The GFS model this morning suggests that you see some more widespread rains return to the Corn Belt around July 3rd. That's pretty far out. I don't know if that's accurate or not, but that's what I'm seeing this morning. So I suppose that the market is not necessarily interested in this hot and dry over the next 5 or 6 days. The market may be more interested in the cooler temperatures coming this weekend, and then maybe the prospect for rain around 4th of July weekend, give or take. And that's a long ways out. I don't know if that's reliable. But if you think about the setup here, you had this heat wave, which a lot of farmers have told me, Joe, this is a good thing. If you get that heat wave followed by these rains around July 4th, that may be just what the doctor ordered in regard to the crop. Maybe I'm making too many steps forward here, but I think that the weather and this these below normal temperatures paired with the idea that maybe the rains come back, maybe that's why the markets are down here this morning, or maybe that has something to do with it. Keep in mind the crop's late. We all know that. Are we in prime time weather market season? The calendar says yes. The crop says maybe we're not quite there yet, but I think we're reacting to weather in some way, shape, or form here today, and I suppose the market's viewing this as being a bearish item. We had some nasty gaps lower on the corn and soybean charts last night. European Union officials called Russia's blockade of Ukrainian grain ports a war crime. So more of the same here to start the week. The Wall Street Journal ran a story over the weekend regarding Ukrainian farmers and their inability to store crops as another wheat harvest is slated to begin. Ukraine said that the EU has offered to help store its grain. The U.S. has offered to build temporary silos at the Polish border. Ukraine is going to receive its first temporary grain storage from abroad very soon, the way that it sounds. Reuters reports that either grain bags, it's going to be grain bags, or temporary silos would be used. Zelensky said over the weekend that Africa is a hostage of Russia's war. He said that Russia's invasion has sparked grain and fertilizer shortages that put millions at risk of hunger. So this thing is more of the same, certainly going in the wrong direction, I think. Large speculators or the funds continue to hold some heavy length in the row crop markets. Funds were net buyers of 7,000 contracts of corn in the week ending June 14th. That group had been net sellers of corn for several consecutive weeks prior to the most recent data set. Funds were net buyers of 4,000 soybeans, net sellers of 7,000 contracts of SRW wheat last week. So you've still got some pretty hefty length here in the row crops. 253,000 in corn, net long 158,000 in soybeans. This is just a very modest net long of about 7,000 contracts of SRW wheat. So you've definitely seen some liquidation, but they're sticky here. I mean, they've been holding a big net long for a long time. It's been a while, back to 2020, since funds were short corn, net short corn, or net short soybeans. The S&P 500 posted its worst week since March of 2020 last week. The index was down 5.8% last week, and it was down 5% the week prior. So the S&P is now down 11% just this month alone. It's 24% from the all-time high, which was posted in early January. So we're very much in bear market territory here when it comes to the U.S. stock market. We've seen a lot of just negative stuff here recently. The market reacted negatively to the May CPI print. We saw retail sales and housing starts that were a little bit softer here recently. You got to bounce in the stocks to start the week, but we are very much in bear market territory, and this is a bad deal. The White House is considering a temporary halt in the federal gasoline tax. Biden said yesterday that his administration is seeking to lower costs at the pump ahead of the 4th of July holiday. Biden said that he could make a decision on pausing the federal gas tax by the end of the week. He said this: "I hope I have a decision based on data." The national average gas price was $4.97 today. That's off of the all-time high by just a few cents, but still very, very high. I don't know if this is the right move or not. I'm no expert in oil supply or demand, but I think we're in a market that is trying to actively reduce demand. And by reducing the tax or eliminating the tax, you're just going to add additional demand. So it's probably not the best thing in terms of like market functionality and stuff if they're going to manipulate the prices lower. But in any case, that's a good thing for drivers out there, I guess, but it's not going to help to solve our supply woes when it comes to gasoline and diesel and that sort of thing. The cattle market was mixed to higher in live cattle on Friday, higher in feeder cattle. Cash was 140 in the south, 145 in the north mostly, so a better cash trade. In the outside markets, the U.S. dollar is lower. The S&P is up 65 ahead of the cash open. The Dow's up almost 500. Bonds are off. Gold's down $4. Silver's higher. Crude oil is up $1.97 at 109.94 in the August WTI. Everybody have a great week. I'll talk to you guys same time tomorrow.